Hi guys, welcome to another video. So in the earlier video we discussed about the assumptions for the real estate sector, and in this video we are going to discuss about the other cost and other cost assumptions for the particular sector. Let's say the marketing and the sales cost for the sales model is a 3% and the year on year expenses are 1%, etc. Then these are the marketing and sales costs for the rental model. It's a 1.5% and the 1% is a 0% is also there. Then we have the brokerage and commission for the sales model. So this is 0% and the administration expenses are 2% for the particular item. Let's say the stamp duty and the registration cost is 0%. Local authority approvals and the other mobilization cost rupees per square feet of the development is 7.050. Primarily expenses rupees in crores and the brokerage are 0%. Soft cost is also there. Then the project management and developer fees is 3.371%. Architecture and design fees is 2.2472%, and the miscellaneous and contingencies are 3%. Cost phasing and the consolidated project phasing cost is 4%, 15%, 25%, 10%, etc. Apart from them, state duty and registration cost is 100%. Local authority approvals and other mobilization is 100%. Primarily expenses is 100%, and the brokerage are 100%. Soft cost is 100%. Initial fixed advertisement expenses is 100%. Project management fees 4%, and the 15%, 25%, and 10% is also there. Architecture and design fees is 4%, then 15%, 25, and 10%. Then miscellaneous and contingencies are 4%, 15%, 25%, and 10%. Then we have the cost calculations for the another things. Stamp duty and registration costs are zero. Then we have the another cost is related to local authority approvals and other mobilization is 3.60. Primarily expenses. Then the software cost, brokerage is also there. Initial fixed advertisement cost. Then we have the project management fees is 26.03 and 3.52 and 5.65. Then we have the architecture and design fees is 17.35, 2.35 or 2.46. Then we have the miscellaneous and contingency is 23.16, 3.13 and 3.28 is the another number. Then we have the opening balance of pre-operative expense. So 3.60, 4.41, 2.94 is also there. Then we have the interest during the construction. Capitalization is 0.81 and the pre-operative expenses written off during the year is 1.47 and 1.47. Pre-operating expenses not written off for the transfer to the balance sheet is 3.60, 4.41, 2.94 and 1.47. So these are the next for the car parking assumptions. Assumed average size per apartment is 1500. Number of the apartment is 3201, and the number of car parks per apartment is 1.15. Total number of the car parks is 48.01, and the one parking slot is sold out for the 1000 square feet. And the average square feet per store is 148. Cost per square feet is 500, and the total cost is 35.53, and the average selling price per slot is 0.202. Total revenue and net profit on the cars parks is 60.50. So this is the cost of equity is 20% and the cost of debt is 12%. Margin tax rate is 33.99% and the cost of post tax rate is 7.92. So these are some of the expenses for the number of different character materials and how to figure it on the different parameters. So these are the something like related to the different parameters of the marketing collaterals. So in this video we are in this is the end for the video. In the next video we are going to discuss about the next real estate model and how to figure out the different parameters of the real estate sectors. So the stay tuned, and for the more videos and like this update you can subscribe the channel and hit the like button, and also share with your friends who want to learn the financial modeling tutorials and also apply for the jobs.